Hello everyone. Today we're going to look at the depreciation recapture. So what does it mean? Depreciation recapture. When you sell Section 1231 assets, those assets that can be depreciable and the gain that you recognize, you should recognize a part of that as ordinary gain to the amount of accumulated depreciation. Okay, now why do we need to do that? So you know that every year when you calculate the taxable income, you take sales minus depreciation expense. This is one of your expenses, and then you get taxable income. So you can see that because we can deduct depreciation expense, and so it's make our taxable income is smaller, and so we can save some tax. Okay, in another word, because the government allow us to deduct depreciation expense, is help us to reduce the taxable income, and so we can reduce the amount of tax that we need to pay. Okay, so as year pass by, right, every year we deduct some depreciation expense, and so we have an accumulated depreciation. Okay, so you remember to find adjusted basic, we take initial basis minus accumulated depreciation, and that will give us adjusted basic, right? And after that, when we sell Section 1231 assets, if the cash that we receive is more than our adjusted basic, then we will have Section 1231 gain. Okay? And if we sell Section 1231 assets and the cash that you receive is smaller than adjusted basic, then we have Section 1231 loss. All right? Section 1231 loss. Now, last time we learned that when we have Section 1231 gain, Section 1231 gain is treated as capital gain. Why Section 1231 loss is treated as ordinary loss. The good things about that is that if we have Section 1231 gain, or we say we have capital gain, it can help to absorb the capital loss. Now, the government say that this is too good for you because you can deduct depreciation expense every year when you calculate the taxable income, and it help you to pay less tax every year. And now, when you sell the Section 1231 assets as a gain, right? Then you treat it as capital gain, and it can help you to absorb the capital loss. And the government said this is too good, and the government say instead of doing like this, the government require the company to recognize a part of this Section 1231 gain as ordinary gain instead of capital gain, and the amount would be up to the accumulated depreciation. Okay, all right, we're going to look at example for that. Yeah, so there are three types of depreciation recapture. The three types of depreciation recapture, and today we're going to look at the first one, which is full recapture, or we say Section 1245. So in full recapture, it say gain is recognized um, as ordinary up to amount of accumulated depreciation. Okay. For example, I have an equipment of 100,000 and I have an accumulated depreciation of 40,000. So 100,000 minus 40,000, my adjusted basic is 60,000. Now there are four situations here. I'm going to explain each one, okay? So the first situation is What if I sell this asset for 100,000? Okay. Now adjusted basic is 60,000 and you sell it for 100,000. It means you realize gain of 40,000. Now, how do we treat this gain? This is section 1231 assets, right? It's supposed to be a section 1231 gain, right? The 40,000 is supposed to be section 1231 gain. But remember the government say this is too good and the government requires to recapture back the amount of the depreciation that we deduct as ordinary gain. So the accumulated depreciation that we have is 40,000. So we have to recognize the amount of gain up to the accumulated depreciation. So in another word, in this case, you will recapture the 40,000 as ordinary gain instead of section 1231 gain. Okay, now the second situation, what happens if we sell this assets for 120,000? If we sell this assets for 120,000, um, then we will have a realized gain of 60,000. Okay, 60,000. All right, class? And remember, we have to recapture the depreciation. We have to recognize ordinary gain up to the amount of accumulated depreciation. So it means that we will recognize gain up to 40,000 of accumulated depreciation, and the rest 20,000 it will be section 1231 gain. Okay, or in another word, it will be treated as capital gain, the 20,000. Okay, so again, the 60,000 realized gain, it will include 40,000 that we recapture as ordinary gain up to the amount of accumulated depreciation, and the rest 20,000 will be as section 1231 gain. Okay, now the third situation. In the third situation, what happens if we sell this asset as 90,000? Then we will realize gain 30,000. Okay, now because this realized gain is less than your accumulated depreciation, so you will recognize all of that as ordinary gain. You have to recapture all of that as ordinary gain. Okay, and then number four, if you sell the assets for 50,000, so in this case you have a loss of 10,000, and this is section 1231 loss. Now when we sell the assets, section 1221 assets as a loss, remember we don't need to recapture any depreciation. Okay, it just simply become section 1231 loss, no recapture depreciation. All right. Okay, so that is called full recapture. Full recapture again. Gain will be recognized as ordinary up to the amount of accumulated depreciation. Okay, next, let's look at the next part. It's called partial recapture. Partial recapture is section 1250. Okay, in this partial recapture, it say if the company is a non-corporation, it means it's not a corporation, and it's purchased a building before 1987. It's very long time ago. Yeah. So it's need to recapture the ordinary gain, okay, which is equal to accelerated depreciation minus straight line depreciation. So the amount of ordinary gain that we recapture, it will be the amount that excess between accelerated depreciation and straight line depreciation. For example, now we have a company A. It is a non-corporation. Okay, it purchased a building before 1987 for $1 million. Accumulated depreciation using accelerated method, which is 800,000, And if we use accumulated depreciation using straight line method, which is 680,000. In 2018, company A sells the building for 400,000. Okay. Now, first of all, we're going to find out the adjusted basic. So we take the amount realized. This is how much we sell it for. So it is 400,000 minus adjusted basic 200,000. How did I get that 200,000? I'll take 1 million, the cost, minus accumulated depreciation 800,000 using accelerated method. Okay, this is for tax purposes. So it will give you 200,000, and the realized gain is also 200,000. Okay. Now, remember, we need to recapture back the depreciation for this building, for the gain, when we sell this building. So how can we do that? Of that 200,000, okay, the amount that we need to recapture as ordinary gain, remember, it will be the difference between accelerated depreciation and straight line depreciation. You remember accelerated depreciation is 800,000, and we minus accumulated depreciation for straight line method, which is 680,000, and that will give us 120,000. So this 120,000, again, it will be as ordinary gain. Okay, and the rest 80,000 will be treated as section 1231 gain, or it is as the capital gain. Okay. So there are two things here I want you to remember. The partial recapture, section 1250, again, the corporation should be the company should be a non-corporation. And second, the building is only applied for building, and building should be placed in service before 1987. Okay, then we will use this one. And the amount that we recapture for ordinary gain is the difference between accelerated depreciation and straight line depreciation. Okay, now the third type of depreciation recapture, we call it 20% recapture. Okay, now the 20% recapture have two situations. Two situations. So let's look at the situation number one. Okay, situation number one is when the company is a corporation. It's a corporation, and we purchase the building before 1987. Okay, so you remember the difference just now? Is this a non-corporation, and the building is before 1987? And now, what happened if it's a corporation and we purchase the building before 1987? Okay, so we're going to add the recapture or as ordinary gain, which is equal to 20% of ordinary gain under full recapture minus ordinary gain under partial recapture. Okay, let's look at the example now. Example, company A is a corporation. Purchased a building before 1987 for $1 million. Okay, accumulated depreciation using accelerated method 800,000. Accumulated depreciation using straight line method on still the same 680,000. And in 2018, the company A sells a building for 400,000. So the same thing, we're going to have amount realized 400,000 minus accumulated minus adjusted basic 200,000, and that will give you realized gain 200,000. Okay, 200,000. You remember just now we have ordinary gain under partial recapture, which is 120,000. Yeah, 120,000. Okay, so we just keep it there. But beside that, The government wants you to have an additional recapture. So additional recapture would be 20%, you remember, of ordinary gain under full recapture minus ordinary gain under partial recapture. Okay, so here I will take 20% times how much would be ordinary gain under full recapture. Remember, the accumulated depreciation of the building um, is 800,000, right? Okay, and our gain is 200,000. So the ordinary gain under full recapture will be maximum at 200,000. Okay, and minus the ordinary gain under partial recapture, which is 120,000, and that will give you 16,000 ordinary gain. Okay, 16,000 ordinary gain. So total ordinary gain we have will be 120,000, 120,000 plus 16,000. It will be 136,000 ordinary gain. And the rest would be 64,000, which is section 1231 gain. So we take 200,000 minus 120,000 minus 16,000, and that will give us 64,000. Okay. So again, this one is applied for a corporation that purchased building before 1987. Okay. Corporation purchase building before 1987. Remember, beside the ordinary gain that we have in partial recapture, we had more addition recapture, which is 20% of ordinary gain under full recapture. Full recapture will recapture all 200,000, and partial recapture minus partial recapture 120,000, and that will give you 16,000 ordinary gain. Okay, now let's look at situation number two. Situation number two is when the company is a corporation and the building is placed in service after 1987. Okay, what happened when you purchase a building after 1987 and your company is a corporation? So amount that we recapture ordinary gain again will be 20% of the ordinary gain under full recapture. Okay, let's look at example here. Example, company A is a corporation purchased a building after 1987 for $1 million. The accumulated depreciation using straight line method that gives you 800,000, and company A sell the building for 400,000. So the same thing, we will have amount realized minus adjusted basic, and that will give us realized gain of 200,000. Now, how about this 200,000? So according to the law, we have to recapture as ordinary gain, which is 20% of ordinary gain under full recapture. If we if we have full recapture class, the 200,000 ordinary realized gain that we have here, full recapture, remember, we recognize ordinary gain up to the amount of accumulated depreciation, right? So all the 200,000 will be ordinary gain under full recapture. So 20% times 200,000, and that will give you 40,000. And this 40,000 is ordinary gain. And then the rest of the amount, uh, it will be recognized as Section 1231 gain, and Section 1231 gain will be equal to 160,000. How can we find this 160,000? It will be 200,000 minus the 40,000 here. So the Section 1231 gain will be 160,000. Okay? Well, somebody will ask, what if the company is not a corporation and they purchase the building after 1987? If they are not a corporation, then the 25% recapture will not applicable, and so they have to recognize all the gain as Section 1221 gain. Okay, they don't have to recapture. Okay, so this is all about depreciation recapture. Again, we have full recapture when we recognize the gain as ordinary up to the amount of accumulated depreciation. Partial recapture. Remember, the company is non-corporation and the building was purchased before 1987. So we recapture the difference between accelerated depreciation and straight line depreciation. The third type of recapture is 20% recapture. And remember, the company should be a corporation and we purchased the assets before 1987. Then it will have additional recapture ordinary gain, which is 20% of the difference between ordinary gain under full recapture and ordinary gain under partial recapture. And the 20% also apply for a company that is a corporation and we purchase the building after 1987. In this case, we recapture ordinary gain, which is 20% of ordinary gain under full recapture. Okay? Okay, thank you everyone.